Joining me right now is Oxbow Advisors managing partner Ted Oakley. Ted, is that where you are? 3 cuts this year?
Well, really, I don't know. I suppose somewhere during the year we'll get a few cuts, 2, 3, 4. Maria, that's hard to say. It depends, I think, on how we kind of go into the year here.
What is your assessment of 2024? How do you think things play out from a macro standpoint?
Well, I'm thinking, Maria, that people are overestimating all the good things right now. Like, we still think there's a very good chance you'll have some recessionary quarters. I'm not certain what Fitch is actually looking at because the data doesn't support it from our standpoint for sure. So we're thinking that, yeah, you could catch a new high here in the first quarter or maybe early, but I think it'll get tougher after that. So that's where we're defensive in that standpoint.
Yeah, and that's pretty much what J.P. Morgan Chairman, CEO Jamie Dimon told me this week, where he said, look, I think that the COVID money runs out this year. I don't believe in a Goldilocks economy and that inflation's going to bounce around 3%. Here's Jamie Dimon with me yesterday.
Consumer has jobs, wages are going up finally more at the lower end, home prices are up, which is good for their balance sheet. But I'm a little skeptical in this kind of Goldilocks kind of scenario. I still think the chance of it not being a soft landing are higher than other people. That's not terrible. It might be a mild recession or heavy recession.
Let's take a look at interest rates this morning because the Treasury yield ahead of the December CPI report is on the move. We're getting CPI numbers at 8:30 a.m. Eastern. And this morning, the 10-year is down 4.5 basis points, sitting at a level of 3.98%. Economists are expecting month-over-month prices to be up 0.2% and 3.2% year-over-year on the CPI. New York Federal Reserve President John Williams says that interest rates are high enough to cool inflation to the central bank's goal, but he's warning that there won't be any cuts until inflation moves down to 2% on a sustained basis, Ted. So where are you on that, the inflation story?
Well, I would be surprised then if that's his comment that you would get anything anytime soon, because it looks to us like that 3 to 3.5% will be sticky for 3 or 4 months now in the future. And so if that's the case, they're not getting the 2. So that's where it would put you, Maria. They would put those cuts further out if that's the case.
Yeah. Mark Tepper.
Ted, what do you make? Look, I know the year is young, so I'm asking this way prematurely, but what do you make of the correlation breakdown that we're seeing within the Magnificent Seven? As you know, last year, a rising tide lifted all 7 boats quite a bit. But this year, there's definitely a bifurcation. You've got NVIDIA on one hand up 9-10% so far this year. On the other hand, you've got Apple and Tesla down 3 and 6% this year. So what do you make of that?
Well, I think it's just fundamentals if you look at it, because what happens is if you look at Tesla, that price is about the same it's been for the last couple of years. It's been up and down, I know that, but their business is not all that great either if you look at everything in the fundamentals of it. And then Apple, you've had 2 or 3 quarters now where nothing's happened on the upside, no new products to speak of. And so those two are going, the other way. And then everybody wants to be AI, so they're on NVIDIA. But I still think we're in the chase market, and people are chasing these areas where they think they can get the most out of it. And everybody's stacked in the same thing.
Mike Lee.
Yeah, Ted, it seems like one of the main consensus trades for this year is fixed income in terms of buying duration. Have you made any major shifts in fixed income? I mean, after the last couple of years, I'm definitely hoping for a rally in bonds. How about you and your clients?
I don't think you'll see us doing that. And I'm telling you, the reason why is that we think this decade is going to go back into a period of up and down inflation, and it's going to be very hard to hold long duration bonds for the long term. You can trade them, but I think it'll be tough.
Ted, you want to sell into any rally?
Well, we've already sold, Maria. We've got a lot of money out of the market, really. We're in the short-term treasuries, but we're okay where we are.
All right, we'll leave it there. Ted, good to see you. Ted Oakley joining us this morning.
Hello everyone. I just want to say, if you like this video and you want to see more of this type of information, because we really try to get the information that you don't see from anybody else, then be sure and click on subscribe and you'll see more of what we do here at Oxbow.